Hey guys, ready to turn bullish? We've seen quite the rally in cryptos and equities. As a matter of fact, even I'm feeling a bit of FOMO. Maybe I should have bought that dip that we hit on January 24th. Maybe I should have at least bought a tranche. So there could have been a tactical mistake on my part with that, but I'm sure some of you have bought the dip and many of you are hodling. So all the power to you. However, I don't think we're out of the woods yet overall in the crypto space. And I'm going to show you why by demonstrating what we're seeing in Bitcoin and Ethereum specifically. What you have in front of you at the moment is the Bitcoin short-term linear 15-minute chart. And I pulled up this chart just to give us a better look at the internal wave structure since that dip. So with Bitcoin specifically, we hit 32,976. That was our low on the 24th. We had a violent rally back up that got us all the way up to about $38,920. If we look at the internal structure of this impulse wave, can make out a small 1-2, looks like a third wave, fourth wave correction, and a fifth wave up. So you can make a case that that is an impulsive wave one up, which is what this green nomenclature is showing. Since then, we've had a small wave two pullback. And then ever since, things have looked quite vague. This looked like a pretty convincing subwave one with a correct pullback. But then now that we've broken back lower than the low back here, it's not clear what this would be if this were a more bullish pattern. Now we're going to look at some altcoins in a little bit where it looks more like a leading diagonal, but we're not seeing that in Bitcoin. In Ethereum, it's a similar story in which our initial rally off the bottom does look convincingly impulsive, but it's a little unique in that we had a bit of a blow off here. So that would be a fifth wave extension, which makes it a little bit more iffy. This could be interpreted as an ABC up. So not as pretty as in Bitcoin. And well, we've had a corrective pullback. And this thing looks a little bit better. It looks like a 1-2 and then maybe a 1-2. Maybe this is a C wave ending diagonal. We're going to touch on the bearish potential in just a second. The alternate perspective is that what we're seeing so far is just a corrective bounce. This might be the entire thing and we're fixing to get back down, or we have only finished part of the correction. So if this is an A wave, which could be an impulse or a three wave pattern, this could very well be a B wave in that we have an A wave down, ugly B wave up, three wave pattern up, and then we're going to finish the impulse for the larger B wave. And then we'd probably have a spike up to maybe the 41,000 range, actually 41,500 range to be exact. That would be a 1-to-1 ratio of this A wave to the C wave that we potentially see. So I'd be looking for something like that. So again, it would be something that looks a little bit like an ABC pattern. So this could be an A, we have a B, maybe you have a C like that. Potential could happen, not totally sure. It's the similar story in Ethereum in which we could have this whole thing could be an A and a B, and this is an ending diagonal C. And the reason I would favor the ending diagonal perspective is that we do have these channel trend lines. The way I have it drawn, I've got this channel trend line drawn from here, but really it should be drawn from here. Maybe it's better if I just draw a new channel trend line. So it could go from here to there, expanding diagonal, whatever you want to call it. So it could be a 1, 2, 3, 4 with the fifth wave to come. Maybe it pierces above $3,100. You never know before an ugly crash. However it goes, it's not clear. So ambiguity is the name of the game here. We're not seeing the clear five wave pattern that we'd expect to see. And really, it's been the same way even in equities, in small caps, NASDAQ, the S&P 500. None of them have had a very standard looking impulse. So there is still quite a bit of downside risk. Now, when we zoom out a little bit, take a look at that Bitcoin chart real quick. We still have the three patterns, but I'm getting very close to just taking the red pattern off. So our primary became purple. And that is by virtue of the fact that we extended so far down and that we didn't quite get to our ideal support point, closer to the mid $20,000 mark. It looks like we should have a bit more downside. It doesn't look complete. However, there is the chance that what we're seeing on the small picture is actually more bullish than we think. Could be a 1-2 in place already. If that is the case, then the green pattern would be your alternate pattern. And that has, of course, that bottom on January 24th as the bottom, and that we wouldn't have any lower lows, nothing like that. Both of those are still on the table. The red I'm going to take off very likely by the next update because it just doesn't look like, it just looks like the first wave was too low, doesn't look proportionally correct. So I would put that as a distant third alternative, if you will. So with the purple, if this is just an internal fourth wave within this third wave, I'd expect some bearish action relatively soon. And based on the internal proportions, we'd expect Bitcoin to get somewhere between 31,759 and 28,000, somewhere in that range, maybe extend as far down as 26,000. Those would all be standard targets for a third wave within more of a diagonal type structure. Now, diagonals, of course, known for very sharp fourth wave retraces. So on our short-term picture, we did have that C wave maybe going to the 41,000 handle, somewhere between 41, let's call it 41 to about 45,000. Those would be your standard extensions off what I'm calling A wave and then potentially B wave. So if we see something like that happen, 41 to 45,000, sorry, I forgot there. That would put us somewhere in this range. So that would be very, well, I'm going to move this up here, somewhere in this range. I'm actually going to draw a box here to kind of help visualize this. Makes it a little bit easier. 45,000-ish. So imagine us going to that box. That would be a very clean looking fourth wave for what we would call an ending diagonal. So again, the diagonal would be a 5-wave pattern for the C. In purple would be a 1. We had a 2. Third wave, sharp fourth wave pullback. That would overlap what we're calling the first wave down. And then we have a final flush down all the way to this zone. However, there is reason to believe that we may go a bit lower first before we're ready to snap back. And this is where things get ambiguous for Bitcoin, in which our third wave again for this ending diagonal could land as far down as $28,000, 26,000. Shoot, we might get down to 23, 24 from just that. And if that happens, again, there's a chance that we're going to be so oversold, we're going to go so deep, would be so close to support that would be all we get. So if we see that kind of a direct drop from here, there's no guarantee that we get a fourth wave bounce and a fifth wave lower. So at that point, I would definitely be a buyer. So that is what I'd be looking for in the purple pattern. And, if we see more of a bounce, maybe we see us going into that fourth wave early. Maybe this was the entire third wave. So that's what we have in Bitcoin. Again, what do I look for if we're going to have a reversal in the trend? 5 waves up and 3 waves back. So when we look at our small picture, I'd expect to see a 5-wave impulse up, a 3-wave pullback. And if we see that, if we don't drop below probably a 61% retrace of what we're seeing here, maybe a 76.4 retrace, 76.4% retrace, $34,000. There's a good chance that is the votive pattern in operation. So that's Bitcoin. I'm going to go shift to Ethereum just to give the specifics on that one. And the picture is very similar. We actually broke a lot more supports in Ethereum. We dipped a bit lower. We're actually much closer to the ideal retracement point in Ethereum than we are in Bitcoin, which may be a good thing, actually. It may mean that we're much closer to the bottom than I think we are in Bitcoin. And here too, we are way too stretched for this to just be a wave one. So in Ethereum specifically, I'm very likely going to take this red pattern off altogether. That would leave us with the green and the purple. And just like with Bitcoin, the green pattern says that we are done. Our low that we hit on the 24th was the official low. We wouldn't expect to go any lower than that. We're going to start seeing some more bullish rallying very soon. My primary, of course, is purple, and that is calling for a little bit more of an extension for our fourth wave. So I really do see this as the bottom of our third wave in Ethereum, just because of how far we've come and because of the proportions. When we look at the small picture, it gives us a bit better of an expectation for where we want to be. Again, anywhere from 29 to 3,100 would be an ideal termination point for this C wave if this is just a fourth wave bounce. So 29 to 3,500, I'm going to actually repurpose this box for that purpose. Always reduce, reuse, recycle. So we're going to bottom this, put the bottom around 2,800, put the top around 31, 3,200, somewhere in that range. That's about where I'd expect the bounce to take us into. And because of the ending diagonal shape that we're potentially going to have the C wave, the reversal could be very sharp. So don't be surprised by that. Again, that is my primary expectation that we will go lower. How much lower is yet to be seen. We have some supports at 1,900 as well as 1,710, and those are both targets that have strong confluences for a variety of reasons. As a matter of fact, our 1,900 point would mark the 1-to-1 ratio of our A wave down to our C wave down, and that would be based on A and B and building an extension off of that. That is where that would land. The second thick red line is our low that we hit middle of summer of 2021. My expectation is that if we do drop to that level, that we wouldn't drop too far below that, even though our ideal retracement point would be $1,100. right now I don't see any reason why we drop that low. Of course, the lower it goes, the more of a sale opportunity you have. You can buy things at a discount, and that is my expectation. So just like with any other cryptocurrency, any other asset for all that matter, we expect to see 5 waves up and then 3 waves down with a higher low. And if we see that, I would absolutely be a buyer. I'd go right back in with a relatively large amount of funds. If we do go lower in what looks like an incomplete third, definitely going to be looking to buy in that situation as well. And as I mentioned, red pattern is more or less, doesn't really make sense. It's a further, it's kind of a distant third alternative. So see what happens. As for other cryptos, so we've gone over the main cryptos. Look at altcoins. We're seeing some similar action in some of them, but some of them have a bit more promise. So this is Bitcoin Cash, similar, maybe one wave up, maybe it's a second wave down, not totally clear. The structure doesn't look like an ABC. Ethereum Classic is a bit more interesting. This actually looks like a leading diagonal. So we could actually draw channel trend lines with this. So we have our low point back here, right around 2130. And well, look at that. If I put a channel trend line together, that looks quite a bit like a leading diagonal. So that would be a very bullish sign if you were asking me. That does look like 5 up, but leading diagonals are very tricky because, well, they look ugly, first of all. They're all over the place, a lot of different interpretations. So they're not a very strong clue. They're not a very strong indication of shifting sentiment. And with a diagonal, you expect a sharp reversal. So this thing may already be in a pretty ugly pullback. Now, whether we're in red or green in this pattern, in this cryptocurrency, depends. If we don't go any lower than our low that we hit, if we stay above 2130, that could be a bullish sign. That could be, again, 5 waves up, 3 down. If we go down past that, there's a very good chance we have a bit lower to fall. And like I said, I'm using Ethereum Classic as an example. You see the same kind of thing in a lot of the other altcoins too. Litecoin, potentially, yeah, could be a diagonal. I saw a few others, Link, Chainlink in this case. Not as clear. We hit the low a little bit right here. We don't really have anything that looks like 5 waves up. Solana had a pretty nice rally, and it too would not follow proper Elliott wave standard proportions, because if this is the third wave, well, it's the shortest of the 5 waves up, so it doesn't make any sense. And let me see, I was going to look at EOS. This also has that 5 wave leading diagonal look to it. So you could draw a channel trend line through the bottom of it, and it does stay within the trend. You do see 5 distinct peaks, but this also has some proportional issues because this third wave is the smallest of the 3 motive waves. So the first wave is obviously bigger. I'd have to do the math to see this. So I'd say that it does look like it could be a leading diagonal, depending on if this third wave is longer than the 5th wave or not. That is where we stand for Solana. And then I'm going to look at Polygon for just a second. So this looks just like the Bitcoin pattern. There's a more clean looking A, B, well, A, B, C, maybe, not totally clear. So we're going to be keeping a look on this. We're hitting quite an inflection point, and we're actually seeing the equities pulling back pretty hard right now, the futures market overnight. So we're going to see if it's going to be a more violent day of whipsaw tomorrow or not. But remember, start getting your buying plans ready, because either we fall lower, get a better price, or we're going to turn right back around and have some more bullish action and a corrective pullback. That'll be the time to deploy all that cash. So don't forget to subscribe so you don't miss those. And until next time, thank you for watching and happy trading.